Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss two trades. One was done by Franz and one I made. So with that, let's go to the first trade and let's analyze it. Franz, please tell us about your trade.
Okay, Roman. Well, I've got a trading plan that I follow, and I feel pretty good about this trade because I stayed right with my trading plan. The first element is to maintain a watch list. So this stock in September was on my watch list, which, I have certain things that I'm looking for. Ideally, I'm looking for a campaign stock, and this stock met the criteria that I had for that at the time. And then
Franz, and actually, hold on a second. Let me just interrupt you for a second. Just
Sure.
for a better, larger, bigger picture, this is the chart of the same stock right here. So just for us to familiarize a little bit quicker, IPO, downtrend, stop in action, COVID low, momentum up, and then we're changing the texture of how the price moves. So we're kind of like in this formation right here with the potential, sign of strength, or you could be thinking here a buying climax, and then we go into a new place, a new trading range. Okay, let's come back to our slides. Go ahead.
Okay. And so there you see the either sign of strength or buying climax in August. I think that Roman had pointed out in the larger time frame. This is a daily chart, but my trading plan tells me that when I get a market green light, which occurred on September 23rd, that I need to be, or maybe it was September 30th, I don't remember exactly, but it was at the end of September. When I get that green light, then I need to be buying something. So this stock is on my trading list, and I see that it's giving me some, some spring type action below the local resistance of that significant down bar. And once we started coming back into that, I thought, okay, well, this is the time to be putting on a position. So I'm keeping an eye on that significant bar the whole time. There was a little bit of a, the market was doing fairly nicely in that early part of October, and there was an attempt to actually an ability to at least slightly commit above, not necessarily the high of the previous day, but at least the previous closes for the last several days. So I added a position there. So at that point, I had I'm trying to get in a campaign, which this initially started out as, with two positions towards the low part of the trading range as I perceive it. So I'm in. So we go along, and we're coming into early November, and we've got earnings ahead. And one of the things that I've learned from you, Roman, based on your back testing, is that in a trading range, earnings can be, it's always contextual, but in a trading range, earnings can have a bigger, volatile impact on your position than perhaps in a trending situation. This is still a trading range by the way I'm looking at it. So I decided I was going to scale out of my second entry and keep the first one and just wait and see what happened. And you can see that there was a pretty sizable percentage reaction on earnings, but then it didn't really have the ability after that volume spike to create any more damage. You can see that it trailed off a little bit, which you'd expect a test of that volume spike, but no more real supply came in, and demand then came back in again, and we had a fairly aggressive rally up to the top of the top of the trading range there. And I was looking at some fundamentals about this company. It's a retailer, especially retailer, and I know we Wyckoff are supposed to look at price and volume, but I also pay some attention to what earnings projections are, and the earnings projections were being cut after that earnings, the most recent earnings report. So I decided at that point that I was going to change my approach from a campaign to a swing. The stock was no longer on my watch list, and I sold at that 23, 29 area, the rest of the positions. So 22% on the first and 33% on the second. So I think I netted about a 25% gain. So for a swing, I think that's okay. But at any rate, that's the trade.
Okay. Well, let me
I
ask
did
you a
move my.
couple of, yeah,
I'm sorry. I did start off. You can see where my original stop loss was, which was at what the original stop loss is down there next to rule. And so when I was starting this position as a campaign, I wanted to give it a whole lot of room. And then as it started to move, I moved both stop losses up and just for downside protection, but that never really came into play.
Well, let me ask you a couple of questions. So what was the original intention? I'm hearing that it was a campaign type of intention, not
Yep.
a swing trade, right?
Right.
So
right.
how did we switch from the campaign to a swing?
After the earnings report, as I mentioned, it had nothing to do with the price volume action. I have to confess, it had more to do with the fact that the earnings estimates for 2021 had been cut down to a point where it just didn't seem like, based on my trading plan and the fact that it wasn't on my watch list anymore, that I was going to keep it.
Mm-hmm. Okay.
Probably not a good answer, but that was my thought process.
No, I totally get this. I understand, why that happened. Okay, and then let's just kind of like go again into this bar. I think that identification of this bar was very important, and you were right on the money with it in terms of the impact this bar has on the whole chart, after, this local climactic action. So, and you have this line right here. It's kind of interesting as I was listening to you. At the earnings, it touches it, penetrates down, recovers, and then touches it again at the correct place. So it's almost acting as that, resistance for the backup action. So I was wondering, I was just thinking about this trade and, how would I do that? How would I just like behave here? I think it's okay to take the profit, especially when you see, supply coming in on the prior day. And you're usually going to have an increase in the volume signature before earnings. That is to be expected. There is a lot of hedging going on. But, this volume increase usually could lead to some kind of, reaction. So obviously, I think it's a warranted scale out opportunity here. You're taking profit, you're making your trade basically break even trade, and you could allow yourself to hold on to the position longer, whatever remains, because you already broke even on that trade. It's a very useful tactic, very kind of like common tactic. So I probably, Franz, would do that, just because of how the price kind of reacted and stayed here, and would probably still be thinking about the original intent for this trade, which is I took some profit on the swing, and now I could realize my campaign ambitions here, if there's going to be some kind of continuation. I would probably move the stop loss somewhere here below this significant low, and just allow it to kind of breathe a little bit more. I mean, in retrospect, if this will be a very good exit just because the price goes down, think about the habits that you're creating, right? So we are not concerned about losses per se. We are more concerned about the habits that we have, because if let's say a trade encourages specific behavior, then we're going to behave this way. And in some instances, it might not actually allow us to profit more if, let's say, the stock just takes off here.
Sure.
But other than that, I mean, I'm definitely seeing a lot of improvements on multiple fronts, right? First of all, point of entry is absolutely identified correctly. And you were asking me in the classroom the other day, what was the conditional trade? Um, the conditional trade would be somewhere here in this area. So this shows more of the stop in climactic action. And then what do we see after that? The spread is diminishing, the volume characteristics diminish. So conditions are being formed for the price to rally. So if we would be opening a position somewhere here, so let's say like on a very, very low supply bar, like this one right here, which looks a little bit climactic in the context of the smaller trading range. This one as well. This one looks like a very much local sprint. So these 3 bars,
Timing bar, yeah.
yeah, they would not be reversal bars. They would not be confirmatory bars. They would be bars that are still within the condition of forming for a potential reversal. So therefore, a conditional trade. The rest of them is going to be just structural trades and confirmatory trades. So everything here, you're just doing everything by the book. Those are confirmations, so you're acting on confirmations, which is totally fine. Well, let's go through the post analysis. So bias is definitely yes.
Okay.
Timing, definitely yes. Character, I think that here maybe either 50-50 or no, because what was the expectation for the character?
An instantaneous up move.
Yeah, so in a more long-term
A
campaign,
sign of strength type of rally. So it really didn't give us that.
so
A sign
probably
of strength
no.
rally would take us all the way up to the resistance, that solid green line up there, and even through it, and may even make a new all-time high versus that previous high back in
So
August.
shall we put no?
Yeah, let's put no.
Okay. So point of entry, yes. Stop loss, yes. Add-ons, yes. Great. Exit, I would say 50-50.
Okay.
50 for the swing and then 50 for the long term. So we have, let me just quickly calculate this, 79%
Okay.
variance. Okay, so what would be your comments and lessons learned? And obviously, we would have to still wait and to see how this develops, right? Just for us to make that final determination how the trade went. So we are analyzing it based on what we see right now. But what are the comments and lessons here?
The comments, well, first of all, I did follow my trading plan, at least in the entry and selection and,
I thought that both points of entry and points of exit, just if you would just say like, this is a purely swing trade, this is great. I mean, like, look at where you get in. You get in right after the reversal, and you get out at the points of vulnerability. So those were awesome.
Okay. The lessons, when you start off with hopes for a campaign, maybe I did need to let it run, but I do really, I mean, I hate to admit it, but I do pay some attention to fundamentals, and the fundamentals just weren't necessarily conducive to the kind of, growth and earnings that I'm looking for. So I don't know.
Well, I think that just that switch between swing and so original intention, that comes to mind. So what was the intention and the intention switch?
Yeah.
Then I can't really think of anything else. I mean, like, to me, this looks pretty good. I mean, I definitely can see the improvement that you have made in the last, like months that you worked, on tape reading and backtesting. So it just shows. And, let it be a lesson to our viewers and listeners as to if you work on your craft, you will definitely improve. And you kind of could see this from this trade from France. So, could we improve on this? I think we can. Even though this looks somewhat perfect right now, I think with more data, we will see what would be the most perfect behavior right there. But this looks to me like a very, very good trade, at least within the context of what we see. All right, Franz, well, thank you.
Thanks. Thank you, Roman.
This is awesome. All right, and now let's look at my trade that I did in Arrowhead Pharmaceuticals. I actually like this stock. It allows me, to participate a lot in the momentum type of moves. I usually swing trade, this type of stocks using options. So it's definitely not a cash position. Uh, what did we see here? There was a prior move up, which showed a lot of leadership, small distributional pattern, downtrend into the COVID decline. So there's a lot of weakness. Just it started earlier than the market. The market, topped at the beginning of February right here. So you could already see established bias to the downside, and then just continuation into COVID low. Recovery that just shows right away that there is some buying on the way up. The next reaction of the same magnitude as this one was much less and showed more bullish characteristics in the character, in the texture of it, and then a big jump showing a lot of demand behind it. And we are kind of operating here, within this bar. For the next, months or so. So what happens usually after this type of volume spike bars? Supply comes in, and the biggest question is about the test. Is it going to be successful or not? So we're just waiting for the test. We don't want the test to go below the low of this daily spread. It did not. It had higher lows throughout in the structure. So kind of suggested selling, stop in action, test of the test, small sign of strength, another final test, and this is kind of like a phase C of the smallest structure here. And then we have the bar that gaps up on the increased demand signature, suggesting that here's that final absorption on the way up of the supply off the support level. And that suggested that, first of all, confirmation of the bullish bars, that's number one, and secondly, the timing, that it's now. So therefore, position is being all open right away, and we're just riding the trend. We're thinking about this target right here, or overcoming it. So maybe like overcoming and then consolidating somewhere here. That was the plan for this trade. So as we travel up, really good leg up with the increased demand characteristics, really good reaction. So we are definitely, supply is lower than demand. We're not reacting too much. We're reacting into the body of this bar right here, and then recovering on the two bars, breaking out. The break is clean, suggesting higher prices. What comes next is, again, those conditions that I was talking about, where conditions starts to deteriorate. So we see it even in this swing right here. But specifically here, look how after the breakout, smallest spread, smallest spread, smallest spread. Actually, true range is okay here. And then because of the options, and those were more of the short-term options, and with this a little bit of a deterioration that we see, move up, and now kind of smaller move up. So there is a shortening of the thrust, so we know that momentum deteriorates. Usually whenever that happens, we would be expecting a reaction. And if it would happen slightly above the long-term high, that's just one thing. But it kind of did not reach it. So there is just this underlying weakness in the demand signature itself. Um, with the options positioned, you want to get out as soon as possible once you see that, because if something like this happens, it's going to eat up your premium. And this is exactly what I didn't want. So on the bar that had the lowest demand, or one of the lowest demand signatures, and showing that demand is weakening, I'm just getting out. And then I was really curious to see what's going to happen next. So to me, this obviously erodes the premium throughout for a week or so, or two. And then obviously I was very satisfied to see when it went down like this, suggesting that the exit was actually somewhat good. The only question here, you know, would I be better, let's say, getting out somewhere here? And I think with options, it's actually not that favorable to go through the erosion of the time premium, even though, you know, you could close at slightly higher prices. So to me, there is not a lot of efficiency on the next exit, but I think it's still pretty good. Um, you know, considering that it took only what 1, 2, 3, 4 days, you know, to get to that close. But I'm wondering if I saw that close, would I get out? And I probably would not, just thinking about, you know, that it's trying to get out, although there is no commitment up. And then on the next bar, that would erode the premium a little bit more. So that's the whole trade. Franz, what are your first comments, thoughts?
Well, can I ask you a couple questions first of all?
Absolutely, yeah.
From a teaching standpoint, we had this big downtrend in late 2019 into March. So obviously our bias in that throughout that range is bearish. At what point did you change your bias to more of a positive? That's first question. Just from my own education.
Okay, well, right here.
That's it. That reversal bar. Yeah.
Well, why is that, right? Yeah. So, what do we see in this bar? Well, first of all, what comes before, right? So, extreme oversold condition. And we're seeing how the volume signature slightly increases. So some demand is there, and then once this bar happens, this is a reversal bar, and it acts as a confirmation that we are done. So on this bar, and you know, it's just very misleading, guys. So, and Franz obviously knew the question, how to ask that. Why is this a misleading bar? Because what would we be thinking here? We would be thinking sell in climax, we would be thinking automatic reaction, rally, and then we're going to go into a trading range. And then the price does not do that. I mean, like there are some techniques where we would be thinking that out of the extreme oversold, we would probably go into this area right here as kind of like an area of value. So here is this, you know, value trading range higher. But this bar, I mean, like if the question is being phrased, when do you know that the bias has changed? That bar defined the change of the environment from downtrend, at least to a trading range, or at least to some kind of rally that will lead to a trading range. So from that perspective, that particular bar. But if we're thinking in terms of the whole bullishness with the causality, then probably it's an area right here where, you know, we're seeing inability of the price to go down and then some recovery. So that was bullish. This was really bullish, and what came after was extremely bullish, because at this point you already see the whole structure. You see that this reaction was a big test of this bigger reaction. So, and after that, you're thinking, okay, well, when does this second point of fear comes? Probably phase C. So I mean, the trading range that we're looking at is probably something like this. And by the way, I mean, like it's still in play in terms of how it looks here, right? Because if this is C, this is a sign of strength, and then we are in the backing up action, and it kind of shows that even after this change of behavior reaction into earnings, we could create, that type of backing up formation and then continue to the upside. But just because it was a swing trade options, and that was the whole conclusion of the trade.
Mm-hmm. Great explanation. Thank you for that. Second question is the timing bar that you used, which is that about the middle of October, that particular bar right there. And sometimes you'll see that. I was really interested as you were going through this, because sometimes you see that as the last supply in terms of a down action, and in this case it was on the the initial move back up above those last two kind of significant down bars. But in both cases, it's a higher level of volume that shows you the timing of when you want to be, getting engaged.
Mm-hmm. So we would usually be looking for the absorption of the supply at the lower level, but because we went through a lot on this bar and then supply comes in on this supply tail, we're kind of thinking, okay, this is the zone where we usually will have the increase of the supply. And we're waiting for the moment when supply is going to be absorbed at that higher level and the price holds, right? So because every time supply comes in, there is a reaction. Every time supply comes in, there is some kind of continuation. Supply comes in, continuation. Supply comes in again on this bar, continuation. So what does it tell us? It still tells us that supply is in control, at least temporarily, just for the time being. And we are waiting for that moment when supply is going to come in, and it does here, and then it holds. So it's this holding that defines the timing of the beginning of the move. It's now. And therefore, just, waiting for this moment obviously paid off. And at the same time, it acts as a confirmation, which I definitely like.
That's a great explanation. Thanks. And it's interesting as you go through this, and what you're really doing is you're doing tape reading. After you've done the tape reading, then you do the labeling, then you do your trading. But the first thing you're looking at is where is the supply and the demand, and you're actually doing that on a bar by bar kind of analysis. So a great lesson. Thanks.
All right. Well, let's go through the post analysis really quickly here. So bias says yes, timing yes, character yes. A little bit I was thinking that we're gonna jump over this high right here. But I'm kind of nitpicking here. Yes, stop loss, yes, add-ons. There were no add-ons, and exit, yes. It's actually not a bad trade in terms of the variance. So what kind of lessons could we learn here? I think maybe France, maybe just add in a little bit more right here on the way up. Why not? I mean, like, why not oversize this position a little bit if we're expecting some kind of momentum? So yeah, let me kind of say no here. So this will be less. So this will be 85, 86%. Yeah, so add on the way up. All right, so again, that kind of mistake of not adding to the position when we are in the profitable position. Could have added here. Yeah, why not? Okay. Well, Franz, I think that's it for today. So we came back to the format that we usually have for the anatomy of the trade. We had quite a lot of comments on the Q&A sessions, and it seems like you guys have liked it. And I feel like we do have a very stable audience that we have. So why don't we, for Christmas and New Year, entertain more questions? So leave your questions under this video, and then we'll pick those up and we'll put them into those last 2 weeks of the year videos, and we'll try to answer your questions. Franz, thank you so much. Great episode.
Thank you, Ramon. Yep, definitely.